evening and welcome back to our 𝐏𝐫𝐢𝐜 channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe and share to stay up to date with the current trends. We welcome back Pranav Kant, a seasoned expert on the oil and gas industry. Welcome, sir.
Thank you, Zina, and it's a pleasure to be back here on the show.
It's a pleasure to have you here as always, sir. My first question to you is crude prices have gained 5% on a weekly basis and have registered a gain for the second week in a row. Do you expect the rally to continue?
Yes, the crude prices actually spent most of the week between 94 and 96 per barrel before leaping higher on Friday, which is the week ending, to reach the highest level in a month, and it's just shy of $99 per barrel, largely on the optimism of the Chinese reopening. That's optimism. We'll come back to it later. And they are roughly 3 barrels per dollar ahead of the last week's close. So that was the situation. And so besides the optimism of China, the larger optimism stems from 3 key factors. And one is the upcoming end of the SPR release. Second is optimism on the OPEC plus production cuts. And most importantly, the impending Russian oil embargo. Now, when we talk of the Russian oil embargo, Hungary, Croatia, and Bulgaria are exempted from that, thanks to the pipeline supplies, which are not here. While there are few of the loopholes, but we need to wait and watch as to how things would eventually work out. So that's a major gray area. What we do not share the market optimism on the China opening up and its resultant impact, because we maintain a fairly bearish view onto the China opening and the demand bounce back. We remain rather cynical of that. And the end of SPR release and the OPEC plus production cuts, yes, they are more relevant to the pricing. So in the coming week, all these factors in balance are likely to have an upward bias in terms of impact onto the prices. So prices would continue to be supported on this short-term immediate trend. So we expect from the current $99 to be hovering around the similar level with about $2 upside and a very minor downside risk in the immediate week ahead.
Well, that sounds like something to look forward to in the weekend. My second question is, do you see higher crude prices supporting FO and bitumen prices?
Yeah, fuel oil prices are directly linked to the crude oil prices, and that's where it largely goes into the shipping sector as a fuel. So there we see some support continuing and largely driven by the crude oil price support. And we expect in the upcoming 16th November of the month, the domestic Indian prices to go up by about $30 per ton. So that's fuel oil in respect to the Indian market. And when we come to the bitumen, bitumen is a little bit more interesting story because the domestic demand season is back on again. And then to top it up, there are concerns about the VAT implications in Iran, one of the major bitumen producers in the region. So we expect in balance, the bitumen prices continue to be supported and be on the buoyant side.
Well, thank you so much for being here today, and thank you for that insight into the market.
Pleasure. Thank you.
And thank you all for watching. Continue to show your support to the channel by liking and subscribing. See you soon.